All right, guys, let's recap our morning session here. It's Joseph James. It's 11:15. 11:15, happy Fed Day to you guys and gals out there. We came into this morning session knowing that the Federal Open Market Committee, they began their meeting yesterday morning, Tuesday morning. This two-day event leaves us now with the FOMC announcement today at 2:15. Now, that's all fine and dandy, but what does that mean for us traders? What does that mean for us? Well, Wednesday mornings are always going to mean crude oil inventories. So the first thing we talked about today was the FOMC announcement, which will be all the way down at 2:15. And of course, a Wednesday means crude oil inventories. We talked about this today at 8 o'clock during our formal morning prep. The FOMC announcement tells me that this morning we should get early morning opportunities, and then later in the morning things will slow down. And boy, did they ever. I wish I wasn't so correct about that, but after 10:30, this has been just a waste of time. It's 11:15 right now, so we're gonna go to some training right now with members. We'll grab some lunch, and we'll come back and we'll trade that reaction to the FOMC announcement at 2:15. We also knew today that we had crude oil inventories. And crude oil inventories is a special time for crude traders. It can also be a time to really cost yourself some profit. So we strategized. We talked about this morning how there's two aspects of the inventory number, demand and the actual inventories. And we talked about how we're going to use those numbers to interpret and react to the news. Well, it's a little bit overshadowed, though, today by the FOMC announcement. So we really didn't get a lot out of this news. Also, we knew that we had to be very careful on crude trading too close to 10:30. So we had to play a balancing act this morning. We wanted to get involved early. And you're going to see here that we really did. We did well early this morning. First two trades I took on crude, we bought the lows of the range. I'm going to show you guys why we bought the lows of the range in just a few moments. So you can see here, we were doing pretty well here for the first hour of the day. Then I got a little bit fooled by the dollar. Dollar index threw a curveball at me. And as the dollar was falling to new lower lows, it quickly reversed. I was in a trade long on the euro, and it stopped me out for a full loss. Losses are going to happen as traders, guys. It's up to me to react positively to that loss. It's going to happen. I'm destined to make mistakes every once in a while. And so that one, as you can see here, pretty much put me in the red here for the morning session. Not to worry, though. We'll be trading here the rest of the day today. And if this afternoon is anything like we've seen this week so far, we're probably going to make all of our money in the afternoon session. If you look back at my archives, this whole week has been like this. You'll notice if you look back at the last couple of days here, we've made the majority of our profit here late in the day. Yesterday, after 10:30, on the 22nd, after 2 o'clock, go up to the previous week, late in the morning, right? So we've been doing this, we've been seeing this pretty consistently for a while. Now what that tells me is this morning's session, knowing that it's FOMC day, it's all about staying alive. It's all about staying alive today. Now what was the big clue that we got on crude oil? Let's go back to my morning prep, because I can cheat right now and I could bring up a live chart, but hindsight is cheating. Let's go back and look at what we were talking about this morning at 8 o'clock this morning. The first thing we're going to notice is, and again, I'm going right back to my blog, right back to Sideways Markets, and this was posted today just after 8 a.m. Here's a 30-minute chart. And on this 30-minute chart, what do we see? Besides the fact that we see a lot of consolidation late in the day yesterday, what I saw right away was higher lows and lower highs. And that right away told me we are consolidated. Well, after I found that big clue, again, don't cheat with hindsight. Look back and see what really happened this morning. Anybody can look back at a chart and say, this is why we did this. But this is the stuff we posted at 8 o'clock this morning. See the difference? Right? I can easily go back and make up some ideas, but this is what we put in writing at 8 o'clock this morning. What do we talk about after we noticed that consolidated market on crude oil, we said, whoa, that's 1, 2, 3 full sessions of lower lows and lower highs, right? We've been trending for 3 straight sessions on crude. Now, that may not sound like a big deal, but if you know what crude's all about, guys, it's difficult to see crude oil trend for 3 consecutive candlesticks, let alone 3 consecutive full trading sessions. So we look at this and we say, boy, crude oil has been running a marathon, and they've got to be exhausted. So we saw the 30-minute chart tell us consolidation. We see the 21 range chart, big bear channel. But the biggest thing here is, it's just like if I was going to go out and run a marathon, I would need a day afterwards to recoup. And so we immediately picked up on this sideways, if not bearish wedge. And we knew that as soon as the price dropped to the lows, we'd buy it. As soon as price jumped up to the highs, we'd sell it. And that was our strategy. Later on in the morning, we got the news that came out, which should have been bearish, but I think it was a little bit too close to that FOMC announcement this afternoon, and I think that was overshadowed by the traders leaving the pit early for lunch. They can come back early and trade the FOMC. So here we are now, and all I'm going to do is on crude, again, like I said before, I'm looking to buy. I know I have a range-bound market, and this range-bound market, here's kind of that sideways range we're talking about. Now, this is a much faster time frame, right? This is a 13 range chart. So I came in and I see the sideways range in the short term. We move below. As I just talked about, our plan this morning at 8 o'clock was to fade the breakouts. We did it twice, and that's where we got our first 2 winning trades. Can you tell where the news was? Yeah, there's where your news came out. So we're sitting on hands waiting for the price to shop around. We make a new lower low. The fact was, we were so convinced that news was bearish. What do you always hear me say, guys? What should have happened didn't happen. And since the price didn't tumble right away, it sat right on top of the previous low of day, which is always going to be an electric level for us, right? Think of the previous low of day as an electric fence that every time you touch it, it loses its shock value. So the first time I touch the previous low of day, right, it's going to shock you pretty good. But now if I touch it again, oh, not so bad. The third time, I can lean on top of that fence and not get shocked. Okay, so it's kind of an analogy there for the previous low of day. So here we are chopping around the previous low of day. And since we had a range-bound market, and since we knew that crude's personality is a fade the news, a fake out breakout type of personality, that's the way crude oil moves historically, we bought it one more time. And so I made about 20 ticks on the way up both times. I made a measly 2 ticks after taking my scratch on the third trade, and with that loss on the euro, I'm back to break even. So crude, a very good day today on crude in the sense that we basically planned our trades and successfully traded our plan. I wish I would have been a little more cautious trading with the dollar today. The dollar really kind of threw me a curveball. Is my dollar 30-minute. When I saw the dollar tumbling off these highs, you'll notice this big candlestick wick right here. Well, at the time, this was a full red candle. And so I get in long on the euro. Getting in long on the euro because the dollar correlation is negative. I'll tell you guys, 95% of the time, this is going to be a winner for you. This is just one of those times when it wasn't. And you can see what happened next. The dollar reversed, green candlestick followed, and of course, it was bye-bye euro long. And so I get bounced out of the euro trade long. Now the euro sits here right now. And let me show you guys here what we're looking at the rest of the morning here. Should I say the rest of the afternoon. Now, later this afternoon, we are going to be taking a break here for members. We'll be going to training. We'll come back around 1:30 to trade the FOMC release. We'll be trading together this afternoon in our members trade room this afternoon. until the end of the day on the E-minis. So this afternoon here, we have to be very worried about this major support on crude. We've got this major level of support, 84.95. At the same time, we've also got the lows of this bull channel. As I come back from lunch, I'm going to be very, very careful selling short on crude. I would rather have the crude price go down to the lows around 85, consolidate, and then give me a chance to buy it back up. Remember, double top support, channel support. But don't forget, if the sellers are clearly in charge, eventually we may have to just throw our strategy in the trash can and trade with the market sentiment. For example, if the FOMC news comes out today and it is interpreted as being bearish on crude oil, once we get below 85, once we get below 84.95, we should be able to get a wave pattern to get short again down to that ABCD support at 84. So it all depends on market sentiment, but we know that we're going to try to be very careful trading short on crude. We should be able to buy long here later on this afternoon. That's crude today. And we'll be looking for crude into the 2:30 p.m. Eastern Time close today. Looking at gold. Now, gold is in a very, very interesting situation right now. It's in a transitional area. You'll notice there's a price wedge there on gold. And that price wedge is the most important thing on this chart. This is a transitional area. If gold makes a new lower low, I'm going to be looking wave pattern short down to the big round number, 1700, down to the lows of this channel, 1690. It will also be below the previous low of day. Remember we talked about this, that electric level. Now what if it rises though? If it rises, we've identified a two-step pattern to buy these lows. So I need to get a new lower low and then look for a wave pattern if I want to get short on gold this afternoon, or I can take it at 1707, so we'll say 1708. I'll adjust this. We had an earlier opportunity which never got triggered, obviously. Now we have the 1708. So we're getting long above the 08s. We're getting short below the 03s. Okay, there's your gold. Sideways range, price wedge, currently an inside day. Again, we always look for the price structure first. Once we know the price structure, then we find the entry pattern. Look at this Russell. Now the Russell will definitely be on our radar this afternoon. We didn't see anything out of this Russell today yet. And you'll notice here, if I zoom back in time here, I'll grab my trend lines of lows, zoom back in, trend lines off the highs. What does that give me? That gives me a price wedge. Step number one, find the structure. What's the structure? Structure is a wedge. What do I do with this price structure? Buy those lows, sell those highs, avoid the middle, right? Mama said, don't fiddle with that middle, and that's where we are right now. And so that's why we haven't even touched the Russell here in the U.S. morning session. So we're trying to stay sitting on hands in the Russell here until we can either get down to those lows, in which I'll look for the M or W pattern. At the lows, it'll be a W pattern. At the highs, it'll be an M pattern. We have made, boy, in the last 3 days, we've had 3 amazing trades on the Russell using a two-step pattern late in the afternoon. So don't forget, the Russell's going to be open until 6 p.m. Eastern Time. It's not an E-mini. It's a little bit different than the other E-minis. Okay, it's fully electronic. Okay, so the Russell's different than the S&P. The S&P will basically be done at 4 o'clock. 4:15, you're pushing it for the electronic close. The Russell won't close, though, until 6 o'clock. So it's got more room to go. And we know that the Russell's been very good to us the past few days. So we're looking, of course, sell those highs, buy those lows. We need to get something happening, though, here in the Russell. If price rises, I'm going to sell the highs of the wedge. I'll also sell the highs of that previous high of day, too. Right? If it blows right through it, fake out, breakout, M pattern, I'll sell the highs again. Now, once we go above 822.3, that's when I'm looking for a wave. That's when I'm looking to buy. So take a look at that major swing high overhead, the major swing low. there's your trading range. Price can move one of three ways. If price moves higher, I sell the highs, I sell the highs, I sell the highs. If price keeps moving higher, I wait for it to break through that highest point, and then I look for a wave pattern long. If price trades sideways, again, price can move three directions, up, down, sideways. If price moves sideways, mama said, don't you fiddle with that middle. So I'll stay away from the trade. If price goes lower, I will buy the lows. If price keeps moving lower, I'm now below the previous low of day, wave pattern short. That's our strategy here going into the afternoon session. I want to thank you all for being a part of this today. We get some more time here to keep chatting. Definitely keep in touch. And remember, guys, I look forward to sharing all of our success and my 12 years of experience. I'm going to make it really easy on you guys. Come join me as a member. I'm going to give you everything you need here. Charts, data, indicators, templates, automated strategies, managed account opportunities. The list goes on and on and on. Pattern scanner coming out later this week. We're here this afternoon. We're almost done here. Keep the questions coming. Thanks for being here.